Today, Goldman Sachs announces a milestone crypto deal with Galaxy Digital, and NFT trading volume has been all over the place. We find out why. Welcome to CNBC's Crypto World. I'm MacKenzie Sigalos. The crypto market started the week with a modest gain. On average, prices for digital currencies rose about 0.2% by 12:30 Eastern. Bitcoin was actually in the red, though. It fell by about 1.25% since yesterday. It's still worth more than $41,000. Ether prices jumped nearly 2.5% in the past 24 hours, and Ripple's XRP token gained about 0.5%. To find out more about the state of the crypto markets, I caught up with Noelle Atchison of Genesis.
The barriers that have been moved out of the way for crypto investors over the past few weeks are actually not that material in the bigger picture. There have been some major milestones that are acting as tailwinds on the regulatory front, such as the executive order, which is showing the entire world that crypto assets are now important enough to warrant attention at the highest levels. But on the other hand, we are seeing constant stream of regulatory challenges. This is a chance for regulators, especially those who are concerned at the erosion of control of funds, of fund flows, to try to regain some of the control through restricting the use of crypto assets. This is not necessarily going to be a big barrier, but it is going to perhaps be it's going to add some uncertainty to investors' outlooks going forward. And as for the uncertainty that we now know what the Fed is going to do, now that we have 25 basis point hikes behind us, we actually have no idea what the Fed is going to be doing over the next few months. The markets are discounting interest rate almost 7 more over the course of the year, 7 more hikes, while the real curve is telling us that that's just not practical or even possible. So there have been some barriers removed, but on the whole, there are still many that remain. The dominance of Bitcoin has been increasing over the past few weeks after a steady period of decline, which shows that Bitcoin's percentage of the total market cap is being eroded by some of the up-and-comers in layer ones, in some of the metaverse tokens, and many of the other new types of DeFi tokens that are out there. This is actually a very good thing for markets. Bitcoin's dominance being eroded shows that the stories are becoming more diversified, that crypto is not just a one-trick pony, and that this really is a transformational technology. Nothing I say is investment advice. But in terms of specific targets, that's impossible to predict, especially given the uncertainty that we've been talking about. The outlook is still good, though, and I can say this from looking at on-chain data. We know that accumulation has been continuing at a slower pace than during most of 2021, but it is still there. We now know that over 80% of Bitcoin in circulation is held in long-term addresses. Over 63% of Bitcoin hasn't moved in over a year. So there's considerable holding activity going on. That doesn't mean the uncertainty is going to let Bitcoin's price start to move yet. When that will change, that's also uncertain.
Okay, so those were the prices. Here are the headlines. First up, Goldman Sachs just executed a major crypto deal with Galaxy Digital. The firm became the first U.S. bank to complete an over-the-counter crypto trade, meaning that it acted as the principal in the trade rather than going the traditional route of a major exchange. Now, there are still details missing from the press release, including the dollar amount, but this move does highlight a trend that we've talked about a number of times here on Crypto World: growing institutional adoption of cryptocurrencies. Next, institutional adoption of digital assets may be growing here in the States, but China might be gearing up for another crackdown. Multiple Chinese tech giants are shifting strategies for NFTs as they fear new regulation from the government. WeChat, for example, just banned a number of platforms aimed at digital collectibles, citing rules violations. Now, it's important to note that these Chinese tech giants aren't brushing off NFTs entirely. Alibaba has an NFT marketplace of its own that it launched last year. NFTs are actually the topic of our main story today. We saw lots of hype around non-fungible tokens in the past year, and even last week at South by Southwest. But data from non-fungible shows that NFT trading volume has plummeted in recent weeks and only just begun to bounce back. The average price of an NFT, it's back up to about $4,200 after falling to about $1,600 earlier in March. I spoke to Ben McMillan of IDX to find out what is happening in the NFT market right now. So Ben, of course, IDX is invested in cryptocurrencies like Bitcoin and Ethereum, but I want to start with the state of NFTs. Non-Fungible found that the average price of NFTs has plummeted in the past few weeks. Trading volume has declined too. Now, some have said that it's a bubble that's beginning to burst. Do you agree with that?
Yeah, I mean, I think in many ways it's a bubble that has burst. And when you look back to, the boom in NFTs last year, really the summer of last year is when it just seemed like there was NFT mints all over the place. They were all trading for, insane valuations. Volume was high. I think if you look at weekly volumes, sometime in August of last year, total NFT volume was over $1 billion. You contrast that to last week where it's under 200 million. So I think in many ways the bubble has popped, and that's also, I think, in large part due to just kind of what we've seen in cryptocurrencies, Bitcoin and Ethereum, really since the Q4 of last year, just kind of risk off mode. There's a macro overhang, which Bitcoin and digital assets are not immune to, neither NFTs. It's not to mean that the structural long-term bull case isn't intact, especially with NFTs, where we see a lot of interesting things happening on the horizon. But yeah, there was a lot of speculative excess that has been flushed out of the market.
So last week we were at South by Southwest and literally everybody was talking about NFTs and new applications of non-fungible tokens. So it sounds like mainstream adoption could be growing. Do you think that this slowdown will affect that trend?
Yeah, I think what's interesting is when you see sell-offs like this, it's when the market starts to place more value on kind of quality of projects. A kid in a hoodie in his mom's basement can no longer just mint 10,000 JPEGs and hope to sell them for $1 million. Now all of a sudden backing starts to matter, quality of the community starts to matter. When you look at some of the quote unquote blue chip projects like CryptoPunks, Bored Apes, which just bought CryptoPunks, they have a lot of backing behind them, and the communities are robust. They're building out they're kind of retrofitting what was originally JPEGs into real world use cases, which is mainly gaming right now. But it's funny you mentioned South by Southwest, because one of the big use cases I think on the horizon that we're starting to see is music. Music royalties ticketing is a perfect example of using NFTs as not just memorabilia, but also access to different parts of the show. So you're starting to hear a lot more conversations about use cases of NFTs beyond just quote unquote overpriced JPEGs into more of the real world. And so I think you're starting to see now, again, with the market fleshing out, investors are starting to place a bias on quality, and even with NFTs that are mainly just culturally significant, they're starting to look more towards like I said, the blue chip projects, the projects where there's something else on the horizon, gaming integrations, et cetera.
So you mentioned the application of NFTs in the music industry, but we've also seen growth in the metaverse as well. Does their use in that budding industry protect NFTs somewhat?
Yeah, that's an excellent question. And I would actually point, there's a great parallel to just Ethereum. A lot of people point to Ethereum and the use cases off of Ethereum, fundamentally as putting a kind of a floor under that token. And I think in many ways, to the extent that NFTs will be successful and, really going out there and effectuating these real world applications, that will put a floor under NFTs. Now, it's important to remember too, not all NFT platforms are created equal. One of the interesting things we've seen is, and this goes back to Ethereum with the congestion issues, is a lot of NFT volume migrated or is migrating to other chains like Solana or Avalanche that are quicker, much more inexpensive, better suited to facilitate higher transaction, lower priced NFTs. If you're trading a multi-million-dollar CryptoPunk, $100 in gas fees doesn't mean that much. But if you're playing a game that requires lots of transactions, you're looking for gas fees that are pennies on the dollar. And so I think to your point about kind of putting a structural floor under NFTs, I think the answer is absolutely, but we're going to start to see it also discriminate by type of platform that the NFTs are built on, and then also the NFT creator and use case as well. But the use cases absolutely are exactly what I talk about when I say the bullish fundamentals long-term look good. It's because of use cases like this across different industries that start to interact with the real world.
So you say that the use case long-term looks good. You're bullish on that. So when do you think we're going to start to see more of an upswing in the prices of NFTs?
I think a lot of it too is just the macro overhang, just the risk-off environment we're seeing. Everything we do in our business is very systematic, very model-driven. And we started taking risk off the table for our clients, back in Q4 of last year, and we're still risk-off. And so that said, we're certainly closer to a bottom than we were to the top. So I think we could start to see some green shoots in terms of risk on in the digital assets markets. But there is still, we're contending with war in Ukraine. Markets are also contending with, rising interest rates and what Fed policy ends up looking like. And so kind of for the first time ever, crypto investors are now having to also, start to think about these things just like more traditional investors. And part of that is just the increasing institutionalization of Bitcoin, which affects everything else, Bitcoin and Ethereum. NFTs aren't immune from that. So I think we're going to have to start to see more of just kind of dollars coming in off the sidelines, bidding up risk assets in general before we start to see some life breathed into NFTs. But again, to your point about kind of individual use cases, I mean, you're starting to see some, projects here and there get traction because, if Audius, which is a small, protocol, just signed a deal with Spotify to, provide, non-fungible tokens for music artists, there's a bullish case right there. And so the development in NFTs is very bullish. I think once the macro markets start to pivot back towards risk on, we can see a real catalyst to the upside.
Before we go, investor Mark Mobius joined Squawk Box to share his latest take on crypto markets. Here's what he had to say.
I thought when this thing broke that the cryptocurrencies would do well because Russians would rush into crypto in order to convert their wealth into crypto and then get money out. But as you know, now U.S. Congress is beginning to look very carefully at a bill to stop that, to really regulate crypto and go after those people that are using crypto to escape the sanctions. So crypto is fine for those people that are in trouble that can't get money out. But generally speaking, I would prefer to have good equities, companies that are earnings. The earnings are there and they're going to be growing even in this environment.
That's all for Crypto World for today, but we will be back again tomorrow with more, and we will see you then.